Before we start this video, do like and subscribe to our channel and not miss on any updates.
Hello my dear CA Inter students, Shivateja is back again from IndigoLearn with a very interesting and exciting video in relation to amendments for GST CA Inter applicable for May 2025 examination. Already few days back, we have done a video for CA Inter income tax amendments for May 2025 and we are very thankful for the great response shown by the students, and this video is specifically for CA Inter GST amendments applicable for May 2025. Before I begin, the first point I want to tell you is that there are not much of amendments in section numbers and rule numbers, but there are some interesting clarifications and some interesting notifications which are given by circulars and notifications which are applicable for May 2025 examination. So in this particular video, we are going to cover all those interesting amendments which are applicable for May 2025 examination, and these are important points. Kindly ensure that you cover up all these points. This is not just for my students who have taken the coaching earlier, this is also for all the students at large. If you have already taken the coaching, don't worry to take coaching again. If you are done with the preparation, don't start the preparation afresh again. If everything is done, just watch this amendments video, your job will be done. This amendments video is of significant importance because generally in exam, 1-2 points come up from this amendments, which will have a weightage of 4 to 6 marks. So this video will get you some good score and add some mileage to your total score. So don't miss out. Now let's start looking at the interesting amendments applicable for May 2025 examination CA Inter GST. Come on my dear students, let's look at what are the interesting amendments in GST. Come on, the first point. The first amendment is an introduction to GST topic, that is, first point, levy of GST compensation cess. We all know that there is a concept of GST compensation cess which is actually applicable on some products, and this compensation cess is being charged on products like luxury products, motor vehicles, and government is charging this only to compensate the states who have lost revenue on account of introduction of GST. And this compensation cess is being extended till 31st March 2026, my dear friends. That is an interesting amendment in introduction to GST topic, more of knowledge purpose. Next point. Now let's look at amendment in supply topic, my dear friends. First amendment in Schedule 3, my dear friends. Already we know that Schedule 3 talks about those transactions which are neither regarded as supply of goods nor regarded as supply of services. That means basically on those transactions GST will not apply. Already we discussed that there are some interesting points like services by employee to employer, services by employee to employer in the course of employment, services by court or tribunal, services by MPs or MLS, services of funeral, burial, crematorium, mortuary, including transportation of deceased, sale of land and building, except construction services. And one more point, what we had earlier was actionable claims other than betting, gambling, lottery. Now this point has been modified to actionable claims other than specified actionable claims. What does that mean? On actionable claims, GST will not apply, but on specified actionable claims, GST will apply. First of all, what is specified actionable claim? Specified actionable claims are those which we are going to talk in the definition. Basically, what they are covered is actionable claims involved in by way of betting, casinos, gambling, horse racing, lotteries, online money gaming. All these are covered in specified actionable claims. That means on betting, gambling, lottery, casinos, horse racing, online money gaming. These days there is a lot of trend of online games, my dear friends. That too where money is involved. On all these games, GST will apply. Because on betting, gambling, lottery, casinos, horse racing, and also online money gaming, GST will apply. Next point. And for your more knowledge, I have given definition of what is online money gaming. Online money gaming means online gaming in which players pay or deposit money or money's worth, including virtual digital asset like cryptocurrency, in the expectation of winning money or money's worth, including virtual digital asset, in any event including game, scheme, competition, or any other activity or process, whether or not its outcome or performance is based on skill or chance or both, and whether the same is permissible or otherwise under any law for time being in force. You cannot afford to tell this activity is illegal, I will not pay GST. For taxation purpose, there is no concept of legal activity, illegal activity. Whether it is legal or it is illegal, please pay GST. Tax first, everything next. That's government logic. Pretty simple. Legality is different, taxability is different. So the point is what, my dear friends? I'll repeat once again, actionable claims other than specified actionable claims. That means on actionable claims, GST will not apply, but on specified actionable claims, GST will apply. And what is covered in specified actionable claims? Betting, gambling, lottery, horse racing, online money gaming, casinos. On all these, my dear friends, GST will apply. And for your knowledge, let me tell you, practically the rate of GST for this online gaming casinos is 28%, my dear friends. Government is charging high rate of GST on these online games. Next point. Supply of food and beverage at cinema halls. Already in the previous video, that means last attempt only, we discussed this amendment, but I put this once again only for reiteration. I'm talking about something like when we go to multiplex movie theater to watch a movie, in the break time or before the start of movie, we might buy some popcorn or some chips or nachos, cool drinks, what not. Exactly. So law is trying to tell that's as good as a restaurant service. On that GST will apply a rate applicable to restaurant service. But let us say that ticket and that snack is bundled together and they are supplied together as a composite supply. Then we will see what is principal supply and then take a call. See that? Supply of food and beverage in restaurant is restaurant service as long as the food and beverage is supplied as a part of service and supplied independent of the exhibition of the cinema exhibition service, and where sale of cinema ticket and food beverages are clubbed together, and that bundled supply satisfies the test of composite supply. And in order to call it composite supply, we all know that it must be naturally bundled and one of which is a principal supply. Then only we treat them as composite supply. The entire supply will attract GST at the rate applicable to service of exhibition of cinema because that is the principal supply. Already I covered this point in the previous attempt amendments video itself. I brought this again here only for reiteration purpose because highly possible that this point may come in the examination again. Yeah? Good. Next amendment, my dear friends. Very important amendment. Replacement of parts and goods under warranty. A very interesting and important amendment, guys. Let me highlight with a different color. Yeah. Friends, this amendment is actually pretty interesting and important. We cannot take chance with this amendment. I'll tell you the reason also why. Because practically, when we buy a car or let's say AC or TV or bike, there are a lot of times we take something called extended warranty. That means we go to a showroom, we buy a car. When we buy the car, let us say for 20 lakh rupees, the car dealer will tell, sir, if you pay extra 2 lakh rupees, we will get extended warranty. Because technically for the car, assume for a second, it is 3 years warranty. The distributor will tell, if you pay extra 50,000, you will get extra 2 years warranty. That means in that 2 years, if there is a part which gets damaged, or if there is a repair which has come up for that product which is under warranty, then that distributor will give that free of cost. Now when I say free, don't think that it is free. That amount is already taken by the distributor at the time of selling itself. So nothing comes free here, boss. Even water is costly, water is also chargeable. And all that GST will apply. There is no second thought about it. See now. Issue number 1. When distributors replace parts or goods under warranty on behalf of manufacturer, with several questions will come. First one, is there a supply between distributor and manufacturer? Second point, is the distributor required to reverse ITC for the related parts? Let's see 4 interesting scenarios in this one, my dear friends. Scenario number 1, distributor replaces parts and invoices manufacturer. That means what? The dealer is replacing the part and again he is claiming that. And again is claiming that means he is raising invoice for that to the manufacturer. For example, let's say there is a Tata company. There is a Tata dealer who is replacing a part of Tata vehicle under extended warranty. And this dealer will raise invoice for that to Tata manufacturer. Possible, right? Very much. Process. Distributor replaces parts using their own stock. That means already there is a stock with them. Using that stock, they are replacing the part or by purchasing from a third party. Then they are invoicing the manufacturer. What is the GST implication? GST is payable by the distributor on the invoice to the manufacturer, obviously because he is going to invoice to the manufacturer and the manufacturer can claim ITC. Further, no reversal of ITC is required by the distributor because already that amount is charged before itself. Next. Example, distributor X replaces a faulty part using their stock and then invoices manufacturer charging GST. This is the first scenario, guys. Second scenario, manufacturer is supplying parts to the distributor without consideration. That means in first case what has happened, distributor has used his own part, done that, provided that his own part under warranty and then raised invoice to the manufacturer. This case is what? Manufacturer is supplying part to the distributor. That means Tata company is giving the part to Tata dealer without consideration, of course, because amount is already billed before itself for extended warranty. Distributor requests the manufacturer to supply the parts for replacement under warranty and the manufacturer provides these parts without charging consideration. No GST is payable and no reversal of ITC is required. Example you see, my dear friends, distributor X request part from manufacturer A who supplied them without issuing invoice because there is no consideration at all. No GST is involved and no ITC reversal is required. Let's see scenario 3. Manufacturer issues credit notes for parts supplied to distributor. We already know what is going to happen when credit note is being given. The distributor uses parts previously supplied by the manufacturer who then issues a credit note. Manufacturer adjusts the GST liability and the distributor must reverse the ITC availed on this part. Distributor X uses the parts from manufacturer A's previous supply and manufacturer A issues a credit note. That is manufacturer A actually. Manufacturer A issues a credit note and distributor X reverses the corresponding ITC. So these are the three interesting circumstances. Let's talk about the fourth interesting case, which is given by circular number 216 of 2024. Distributor replenishes the stock from manufacturer. That means what? He has given under free warranty and he is again getting that stock from the manufacturer. That means he is not getting credit note, he is not getting money, he is getting the stock replacement. Distributor replaces parts from their stock and later requests replenishment from the manufacturer who supplies the parts via delivery challan. GST implication, no GST is payable on the replenishment and no ITC reversal is required to be made. Distributor X replaces parts from their stock and requests replenishment from the manufacturer A who supplies the parts through delivery challan without charging GST. Through delivery challan he will give without charging GST. See one interesting note. If distributor provides repair services, previously what we spoke was all about parts, repair services as a part of warranty and subsequently charges manufacturer, then GST would be payable on such provision of service by the distributor to manufacturer. That means on the service GST will apply. There is no doubt about it. Next, extended warranty. Let me talk about now what is the tax treatment for the extended warranty that is being provided. Previous point what we spoke was about replacement of parts under warranty. Now we are talking about what is the tax treatment for the warranty provided. Is GST payable when the companies offer extended warranty options to customers at different times? Number one, extended warranty is given at original supply itself. If customer purchases an extended warranty at the time of original supply, it forms part of component supply. For example, let me tell you, practically just few months back, I purchased one car where they get 3 years warranty. Apart from the 3 years warranty, I paid extra 70,000 rupees for additional 2 years warranty. That's nothing but extended warranty, where I paid initially itself at the time of purchase of car. Now, consideration is included in the price of the goods and GST is payable on total amounts. Note, if warranty is supplied by different entity, it is treated as separate supply. Obviously, if the dealer is not giving that warranty, if some other third party is giving, then that is separate transaction altogether. Next line. Customer X is buying an AC with extended warranty time of purchase. GST is charged on the total price including warranty. Extended warranty after original supply. If customer purchases extended warranty after original supply, it is considered as a separate contract, obviously because the first transaction is over. GST is payable by service provider based on the contract nature. And example is what? Customer X purchased extended warranty for the AC 1 year later. This separate contract and separately GST will apply. So these are the interesting amendments in the topic of supply under GST, my dear friends. So we're done with amendments in introduction topic, done with amendments in supply under GST topic. Now let's move forward to amendments in charge of GST topic, my dear friends. See that. Charge of GST. First interesting point. Friends, we know an interesting amendment, already we know before itself, an interesting point, that is services provided by director to the body corporate is covered under RCM. When I say service by director to body corporate is RCM, any service provided by director to the body corporate in director's professional capacity, that is covered under RCM. That means practically I also told you that where TDS is required to be done under 194J by the company, then on that transaction, company is required to pay tax under RCM. But now an interesting point you see. If service is supplied by director in his personal capacity, such as renting of property, that means what? Director has got one property, he is giving that property on rent to the company. On that transaction, RCM will not come, because RCM will come only in case where service is provided by director to the body corporate in the director's professional capacity, not in the personal capacity. See that. Tax on service supplied by director of a company to the said company or body corporate is payable under RCM. It is clarified that service supplied by director of a company to the company in his private or personal capacity, such as renting of property, are not taxable under RCM. Only those services supplied by the director of a company or body corporate, which is supplied by him as or in the capacity of director of that company, shall be taxable under RCM in the hands of company. So whatever is giving in the capacity of director, that will only come under RCM. If he is giving something in his personal or private capacity, such as renting of property, then the RCM provisions will not apply. Next amendment, my dear friends. Very, very important amendment in charge of GST. And I strongly believe that this will come in the examination. Please note this point, my dear students. See that. We already know that in case of renting of immobile property, there is a concept of RCM provision in case of service of renting of residential dwelling to a registered person for business purpose. Service of renting of residential dwelling to a registered person for business purpose, RCM provisions will come. Now, one latest amendment which has come up very recently, my dear friends, just few months back, the amendment is something like this. Service by way of renting of any property other than residential dwelling. When I say other than residential dwelling, what does that mean? Simple line, renting of a commercial property by any unregistered person to any registered person. That is clearly covered under RCM, my dear friends. Very, very important point. In simple terms, one line to say, service by way of renting of commercial property by an unregistered person to a registered person is covered in RCM. You all know that I'm also a practicing chartered accountant. A lot of my clients, they are operating their business in a rented premises. They are paying rent to the property owner, and that property owner is not registered in GST. A lot of times, maybe because his aggregate turnover does not exceed 20 lakhs. But I sent out a mail to all my clients telling that, my dear sir, even though your owner is not registered in GST, you are required to pay GST under RCM because it is a clear case of renting of commercial property by an unregistered person to a registered person. That is covered in RCM. So these are the interesting amendments with respect to charge of GST. Now let's move forward. Let's talk about amendment in time of supply topic, my dear friends. Only one interesting amendment, already we know this, last time also I have covered this. That is time of supply in respect of construction and maintenance, construction of road and maintenance of national highway projects. In a HAM model, when I say HAM, I am talking about something called hybrid annuity model, where a road is constructed and the road is operated and maintained. This service is provided to NHAI, National Highway Authority of India. And this is very clearly a contract of continuous supply of service. And based on that only we'll charge GST. And based on that only we'll apply the concept of time of supply. And what does time of supply say? If invoice is issued within the prescribed time, then the time of supply will be date of invoice, date of payment, whichever is earlier. And if invoice is not issued within prescribed time, then the time of supply will be date of completion of service or date of payment, whichever is earlier. So that is the interesting concept of time of supply with respect to construction of road and maintenance of National Highway Project of NHAI, my dear friends. I'll show you here. It is regarded as a continuous supply of service where the contract is for a period more than 3 months, my dear friends. And tax will come at the time of invoice or payment, whichever is earlier. if invoice is issued within the prescribed time. And if invoice is not issued within the prescribed time, what will happen, my dear friends? Date of completion of service or date of payment, whichever is earlier. That's it. That's the story of amendment in time of supply. Now moving forward, my dear friends, some very important amendments with respect to exemptions under GST. We all know that exemptions is one such topic which is a short topic which comes in the exam almost every time, my dear friends. So let me talk about amendments with respect to exemptions under GST topic. Please watch out carefully, my dear friends. See that. Number 1, services provided by Ministry of Railways, that is Indian Railways. Indian Railways is giving service to individuals by way of sale of platform tickets, facility of retiring rooms or waiting rooms, clock room services, that is where you can store your baggage, battery operated car services. This has become very common in lot of railway stations where they are giving service of battery operated cars for moving from one platform to another platform, and they are charging some consideration. On that consideration, GST will not apply because it is exempt. Service provided by Indian Railways to individuals by way of sale of platform tickets, facility of retiring rooms or waiting rooms, clock room services, battery operated car services. Next. Service provided by one zone or division under Indian Railways to another under Indian Railways. That means one division of Indian Railways is giving service to another division of Indian Railways. That is also exempt under GST. Next. Some interesting clarification related to GTA service, goods transport agency, my dear friends. That is, goods transport agent is not somebody who is just engaged in transportation of goods, but along with that he also provides some ancillary services like packing, warehousing, loading, unloading, all that activities are done. And that is clearly regarded as generally composite supply. Method of invoicing used by GTAs will not alter the nature of composite supply. However, if services are not provided in the course of transportation and are invoiced separately, then they are not regarded as composite supply. That means if it is a part of composite supply, then we will treat them as composite. If not, we will treat them as separate service altogether. Interesting points. Next. General insurance business, service by way of reinsurance of the insurance scheme. We have got some insurance scheme like health insurance, Bangladesh Bima Yojana, cattle insurance scheme, lot of insurance schemes are there. Along with that normal insurance, reinsurance is also exempt. Reinsurance is where a part of insurance is reinsured by one insurance company with another insurance company. Retrocession means a reinsurance transaction whereby a part of assumed reinsured risk is further ceded to another insurer. It has been clarified that the term reinsurance include retrocession services. Next. Service provided to the government. It's not by the government, it is to the government. Service provided to a governmental authority. What service we are giving? Governmental authority by way of water supply, public health, sanitation conservancy, solid waste management and slum improvement. Some students might be thinking, so already this amendment you told in the last attempt itself, in the previous video, I heard that time also you told. I know I told this, but again I am telling this point again because it's an important point. Some points, a couple of points are duplicated from the previous last attempt amendments video as well because they are important. Next. Other exempt services, important. These are new points, so please see carefully. Service of supply of accommodation service having value of supply less than or equal 25,000 rupees per person per month, provided accommodation is supplied for a minimum continuous period of 90 days. That is minimum 90 days it is given, and the value of supply is less than or equal 25,000, then it is exempt. So basically we are talking about hostel where the value of supply is less than or equal 20,000 rupees and it is given for a minimum 90 days, then it is exempt. Not just hostel, maybe paying guest. Clear? Next. Supply of service by way of providing metering equipment. What equipment? Metering equipment. That means who is giving this? Electricity department. Metering equipment on rent, testing meters, transformers, capacitors, etc., releasing electricity connection, shifting of meters, issuing duplicate bills, which are incidental or ancillary to supply of transmission and of electricity provided by electricity transmission distribution utilities to their consumer. This is exempt. So on electricity, there is no GST. Along with that, on this transaction also, there is no GST. Providing metric equipment, giving electricity connection, shifting of meters, giving duplicate bills, on all this also GST will not apply. Next point. Service of affiliation. What is affiliation? Affiliation is something like recognition given to schools and colleges. But this exemption is not to private schools and colleges. It is to whom you see? Affiliation provided by central or state educational or council or any other similar by whatever name called to an establishment owned or controlled by central government, state government, union territory, local authority, government authority or government entity. So if affiliation given to an establishment which is owned by the government, owned by local authority, owned by the government entity, then only it is exempt. But affiliation service provided to other schools, universities, colleges, that will definitely become taxable. That means any affiliation given to private schools, colleges and all will definitely become taxable. Next, R&D services against consideration received in the form of grants supplied by a government entity or a research association, university, college or institution notified under income tax. The condition is that research association or college should be notified under income tax is notified at the time of supply of R&D service. That means at the time of supply of service, they must have been notified under income tax law. At the time when they are giving service, at that point of time, they must have been notified. So R&D service which is given against consideration received in the form of grants, that service will be exempt. So these are some very interesting amendments in exemptions topic, my dear friends. We still have some more points to discuss. Let's proceed. Don't relax. It's very important video, my dear friends. Don't relax at all. Friends, we are done with amendments till the concept of exemption. Now let's talk about some more interesting amendments, my dear friends. Let me talk about the amendments in the concept of place of supply. We know that place of supply is an interesting and important topic, my dear friends, where we have learned about section 10, 11 and 12, my dear friends. Now see, 10 talks about goods, 12 talks about services. Now section 10(1) CA, which basically talks about place of supply in case where goods are supplied to an unregistered person. It is something like, let us say, I am Shivateja. I placed order online, let us say through e-commerce operator, through let's say something like Amazon or Flipkart. And I have given billing address differently, delivery address differently. In that case, they have clearly clarified that in case of supply of goods to unregistered person, this only to unregistered person I am talking about, through an e-commerce operator, place of supply will be the delivery address but not the billing address. A very interesting point to be noted. Already we know this, but see now. Place of supply shall be the delivery address and not the billing address. Next point. Let me talk about some interesting amendments in the topic of input tax credit, my dear friends. Clarification of time limit under section 16(4). First of all, what is section 16(4)? We know that 16(4) talks about maximum time limit within which ITC can be claimed. And what is the maximum time limit, my dear friends? 30th November following the end of financial year or the actual date of filing annual return, whichever is earlier. That is the time limit within which ITC can be claimed. What is the time limit? 30th November following the end of financial year in which invoice is issued, or the actual date of annual return, whichever is earlier. Now let me talk about special point, that is, assume for a second, there is a transaction which is covered under RCM. That means what? Which is covered under a reverse charge mechanism. And supplier is unregistered person, recipient is registered person. If supplier is unregistered person, recipient is registered person, and the transaction is covered under RCM, then who is required to issue the invoice? The recipient should do a self-invoicing on his name. Then in that case, the time limit, my dear friends, we will see the financial year in which invoice has been issued by the recipient, because recipient is going to do a self-invoicing on himself. Of course, all the conditions for claiming credit should be satisfied. There is no doubt about it. Next, time limit for taking ITC in case of revoked registration cancellation. We know that when registration is cancelled, we can apply for revocation. And if, let us say, registration is cancelled because returns have not been filed, and registration is cancelled, let's say retrospectively, then what we can do is we can apply for revocation. Registration is revoked and once it is revoked, within 30 days, we have to file all the pending returns. In that case, my dear friends, if there is any credit which we have not claimed, we can claim. But we all know that the maximum time limit is 30th November following the end of financial year or date of filing annual return, whichever is earlier. Here also they have clarified that in case where registration is revoked, if you file all the pending returns within 30 days, you can claim ITC also. Provided only one condition. At the time when cancellation is done, by that time, if the time limit of 16(4) is gone, then you cannot claim the credit. If not, you can claim. See now, relaxation has been given and the time limit to avail ITC in respect of invoice or debit note is extended till the date of filing returns in case where returns are filed within 30 days of revocation of cancellation, subject to condition that time limit to avail ITC has not already expired on the date of cancellation of registration. So as on the date of cancellation of registration, time limit under 16(4) should not have been expired. That is an important condition. Next point. Clarification of availability of ITC in case of ducts and manholes used in network of optical fiber cables. Friends, we know that in 17.5, which talks about block credit, there is 17.5C and 17.5D. 17.5C talks about works contract service in relation to construction of immovable property. 17.5D talks about goods or services or both involved in construction of immovable property. If it is construction of immovable property, then ITC is not allowed. However, if it is construction of plant and machinery, then ITC is allowed. They are given a clarification that these ducts and manholes are a part of plant and machinery. When it is a part of plant and machinery, ITC will be allowed. Because these ducts and manholes are mandatory. Basically, they are used for the purpose of laying that fiber cables and they will be covered in the definition of plant and machinery. And once they are covered in definition of plant and machinery, my dear friends, ITC will be allowed. So it is clarified that availment of ITC is not restricted in respect of ducts and manholes. Next point. Availability of ITC in case of demo vehicles. Friends, what is demo vehicle? Demo vehicle means what we all know, my dear friends. Demo vehicle is nothing but a vehicle which is used for demo purpose where customers come and try that vehicle. If they like that, they will do the booking of the vehicle. And we know that as per section 17.5 clause A, a motor vehicle where seating capacity is not more than 13%, ITC is not allowed. And when we talk about a demo vehicle, this demo vehicle is nothing but a vehicle which is used in the course of furtherance of business. Without your demo vehicle, without demo, which customer is going to come and book the vehicle? That is the reason why they have clarified that this demo vehicle is used for promoting the sales and accordingly ITC will be allowed. Next point. Some interesting amendment in registration topic, my dear friends. That is, we know one concept that if any person is engaged in supply of goods through e-commerce operator, we know that registration is mandatory. But there's an interesting amendment in this context. That is, if a person is supplying goods through e-commerce operator, still he is not required to take registration if turnover does not exceed the threshold limit of 40 lakhs, 20 lakhs or 10 lakhs as the case may be. Provided he is engaged only in intrastate supply, he is having a PAN, he is having a place of business and he has obtained an enrollment number on the GST portal. If all these conditions are satisfied, then in that case, my dear friends, he can enjoy the benefit of exemption of registration. I am sure you got a clarity. So if a person is supplying goods through e-commerce operator, still he is not required to take registration provided turnover does not exceed threshold limit, he is not engaged in interstate, he is having one enrollment number which he has obtained through GST portal and is having PAN. Next point. Furnishing of bank account details. We know that the bank account details can be submitted even after obtaining registration. But you have to update the bank account details, my dear friends, within 30 days from the date of grant of registration or before the due date of furnishing GSTR1. What is GSTR1? Statement of outward supplies. If you don't do that, registration will be suspended, my dear friends. Not a joke. Very big point to be noted. So see here. Taxpayer has an option to give bank account details within 30 days from the date of grant of registration or the due date of furnishing outward supplies, that is GSTR1, whichever is earlier. However, this relaxation is not there for TDS deductor, TDS collector, or who has person taken voluntary registration. For those people, this benefit is not there. Next, revocation of cancellation of registration. We know that any person whose registration is cancelled, my dear friends, by the government officer, by the department, then you can apply for revocation. And the time limit to apply for revocation is within 90 days. And this 90 days can be extended by the commissioner or any officer authorized by the commissioner not below the rank of additional or joint commissioner for a further period not exceeding 180 days. And once we apply, within 30 days, if he is satisfied, he will revoke. If he is not satisfied, he will give a notice seeking further clarification. Once he gives a notice, within 7 days, we have to respond. And once we respond, within 30 days, he will decide whether to grant revocation or not to grant revocation. So you have to keep in mind about this concept of 90 days and that extension not exceeding 180 days. And within 30 days, he will decide. If he has a doubt, he will give a notice and he will give 7 working days time. And once we reply, within 30 days, he will decide whether to grant revocation or not to grant revocation. So these are the interesting amendments in the topic of registration, my dear friends. Now let's move forward to the amendments in the topic of tax invoice, credit note and debit note. Only one interesting amendment, that is, in case of online money gaming or service is given through e-commerce operator to an unregistered person, my dear friends, it is mandatory that invoice must mention the name of the state of the recipient. It's not necessary that entire address is to be given, but the name of the state has to be mentioned. That's an important criteria, important requirement. Because that is basically decide where should the tax go. Because we all know that GST is a destination-based consumption tax, as we all know. Next, payment of tax amendment, my dear friends. Something interesting. We all know that we are required to pay interest as per section 50 at 18% in case where return is filed after the due date. And we know that interest is required to be paid on the amount paid using cash ledger. On the amount paid using cash ledger. However, if return is filed after commencement of proceedings by the GST department, then interest will come on entire gross GST liability. Now here comes the point. Let's say for January month, the due date to file return is 20th of February. We have filed the return on 24th of February. There is a delay of 4 days. For these 4 days, are we required to pay interest? Yes. But assume for a second, whatever tax he has to pay, he has already deposited that amount in cash ledger on or before 20th. Then law is telling, we will not charge you interest. That means whatever tax you have to pay, you please deposit in the cash ledger on or before the due date. Then we will not charge you interest, even though return is filed late, provided the amount is deposited in the cash ledger on or before the due date. See that line? If the amount is lying in the ledger, if any amount has been credited to the cash ledger on or before the due date of filing the return and is debited after the due date, that will not be considered for calculating interest if the amount is lying in that ledger from the due date till the date of debit. In that case, we are not going to charge interest. Next point. Amendments in TDS and TCS. We know that there is a concept of TDS given by section 51, TCS given by section 52. And TDS is applicable only to government departments, public sector undertaking, society established by the government. In all these cases, there is a concept of TDS. One new point has been introduced in section 51, my dear friends. That is, any registered person receiving supplies of metal scrap. What is that, my dear friends? Metal scrap from other registered person. That means B2B transaction we are talking about. If a registered person is receiving metal scrap from another registered person, then receiver is required to do TDS under section 51. We already know the rate of TDS 1% plus 1%. If it is IGST, it is directly 2%. So the new amendment in section 51, new point added is metal scrap received by any registered person from another registered person. Next, TCS amendment, section 52. In case where there is supply through e-commerce operator, the rate of TCS has been reduced. Now the rate of TCS is 0.25% plus 0.25%, CGST and SGST. If it is IGST transaction, then the rate of TCS will be 0.5%. So these are the amendments in payment of tax, TDS and TCS. Now what is left to talk is only about the amendments in the topic of returns. Let's talk about it. Now finally, let me talk about some interesting amendments in returns. My dear friends, please note that all these amendments what I am discussing in this video are very important and they are applicable for May 2025 examination CA Inter GST. So don't miss out. See that. Returns. First amendment, which we already know before itself, that we are not allowed to file GST returns if we have not furnished the details of bank account. That means if we violate the provisions of Rule 10A, that means we are not updating bank account details within 30 days or due date of furnishing GSTR1, we will not be allowed to file returns. Next interesting amendment, my dear friends, that is in GSTR1, we know that we are required to give details of B2B and B2C. Earlier, the concept was invoice-wise details were required to be furnished in case of B2B and also in case of B2C where interstate having invoice value more than 2.5 lakhs. Now, this 2.5 lakhs has now been changed to 1 lakh. That is the interesting amendment. See that? Invoice-wise details are mandatory for B2B supplies and also for B2C interstate. B2C interstate where invoice value is more than 1 lakh rupees. If not, we are going to give consolidated details. Getting the point, my dear friends? So where invoice-wise details are required? Number 1, B2B supplies. Number 2, B2C interstate where invoice value is more than 1 lakh. That's the point. Already we know this concept, but only difference is that 2.5 lakhs has become 1 lakh. Nothing new, only limit has been changed. Next. So that's it. This is all the story, whatever I discussed now. That 1 lakh story where I told you that B2B case, invoice-wise details are mandatory. B2C interstate where invoice value is more than 1 lakh, there also invoice-wise details are mandatory. If not, consolidated details are required. Next, finally, one more interesting concept, my dear friends. Recently, they have introduced a concept of GSTR 1A, my dear friends. What is GSTR 1A? We know that once we file GSTR 1, if there is any mistake in GSTR 1, statement of outward supply, how do we rectify that mistake? In next month GSTR 1, under amendment column, will rectify that mistake. Correct or not? Exactly. But recently they have introduced a form known as GSTR 1A, which can be filed before the due date of filing GSTR 3B, where they have mentioned that if GSTR 1 is filed, we have done some mistake in GSTR 1 or some invoice is missed in GSTR 1, we can report that in GSTR 1A. Which can be filed before the due date of filing GSTR 3B. That's an amendment. However, since it is filed after the due date of GSTR 1, it will come in 2B of next month for the recipient. It will not come in 2B of this month, but it will come in 2B of next month for the recipient because GSTR 1A is filed after the due date of GSTR 1. Getting the point? See that. In case where a taxpayer after filing GSTR 1 realizes that some amendment, which could be upward or downward, there is an optional form GSTR 1A. It's a new concept. This allows him to add any particulars of current tax period which are missed out in GSTR 1 or amend any particular details in GSTR 1, including those which are given in IFF, that is Invoice Furnishing Facility for QRMP scheme. So registered person may after furnishing GSTR 1, but before filing GSTR 3B. Of course, before filing 3B only you can change. It is option, amend or furnish details in GSTR 1A. So that's the story of GSTR 1A, my dear friends. You need not wait till next month to amend the mistake in GSTR 1. You can do that by filing GSTR 1A. That's it. Next, finally, one last amendment in returns topic, my dear friends, that is GSTR 4 time limit. GSTR 4 is nothing but a return which is to be filed on annual basis by a person registered under composition scheme. Earlier, the due date was 30th April following the end of financial year. Now, the 30th April has been changed to 30th June. So, GSTR 4, which is a return to be filed on annual basis by composition registered person, can be filed and the due date for that is 30th June following the end of financial year. I am sure already we know that they are required to pay quarterly payment of tax by 18th of the month succeeding the end of quarter. And the return is to be filed on annual basis in GSTR 4 by 30th June following the end of financial year. So these are the interesting amendments in returns topic, and these are the interesting amendments with respect to CA Inter GST applicable for May 2025 examination, my dear friends. So don't miss out this video. This is a must watch video for those who are writing in May 2025 with respect to CA Inter GST amendments. That's it, my dear friends. Any doubts? Shivateja is always there for your support. IndigoLearn is there at the back of you for your success. Any doubts, feel free to comment, or you may raise a query in the forums. We'll be more than happy to reply. So with this, I conclude my video and I wish you all the very best and I wish you all success. Do come out with flying colors. Your success is our success. Thank you so much. Shiva Teja signing off. Thank you.